Hey everyone, Ben here. As the old saying goes, there's no safer investment than bricks and mortar and invest into land because God isn't making any more of it. Now I've received a number of requests from you guys to do some more videos on investing into property or real estate as you guys commonly call it in the USA. Now my personal passion is investing, and in the words of the legendary investor Warren Buffett, if you don't find a way to make money work for you while you sleep, you'll work until you die. Now to me, that's a major motivator, but I personally have a real passion for investing, both in stocks and property or real estate, of which I have a substantial portfolio. So in this video, to help you guys out, I'm going to distill down and simplify the wisdom I've learned about investing into real estate over the past few years. So what's this strategy called? Well, the strategy is called BRR, or Buy, Refurb, Refinance. Now this is a strategy which is commonly taught in these $10,000 property investing courses, these real estate investing courses, these really expensive courses, but I'm going to give you this strategy in this video for free. So kicking things off at the first point, and that is B, which stands for buy. Now of course you've got to buy the property, but the trick is to aim to buy the property at below market value, and the way you can do this is by buying it from a motivated seller. So this is somebody who needs to sell the property. Let's say they're going through some personal situation. Let's say they just really want to get rid of the property at this current time. Then that can be a great opportunity to get a great deal on that property. So my personal advice to anybody watching would be to assess the property values in the area, check on Rightmove, check on relevant website, Zillow if you're in the US, check the relevant property sale prices in the area, and then try to get a good deal on the property. View 40, view 50 different properties, and I guarantee you'll find a great deal after viewing all those different properties. You'll also know the area really well. Now the price that you pay for the property is so important because like any investment, you make the money when you buy the property, not just when you sell the property. Okay, so the second point is to refurb. So this could be a refurbishment, this could be a renovation. For example, a common refurbishment is to actually purchase a 2-bedroom, 3-bedroom property and then convert the loft into another bedroom, or just do a loft conversion for extra storage. You could also build an extension out into the garden, or even create a full open plan living room by knocking through the wall between the living room and the kitchen area. These are all methods of adding value to the property when you wish to buy it. Do the numbers, get at least 3 different builders' quotes from reputable builders who've actually done the same job before, if not similar. Don't just take somebody's word for it that they can do the job that they say they can do, because a lot of the time they may not be able to do it, they may not have the skills, or it may cost you a lot more in the future. So definitely get 3 different builders' quotes, look at their previous work, and then get a correct timescale, and don't pay by the hour for any works done. That's just personal tips from me to you guys. Now the whole point of this when you're viewing these properties is you're looking for a different angle. You're looking for something which nobody else might have seen and where you can add potential value. Okay, so you've purchased the property at below market value from a motivated seller. You've done some renovations and some refurbishment. Now it's time for the magic. This is the time to refinance the property and pull all your money out of the deal. Now I'm going to go through a simple example of this just to give you guys a brief overview of exactly how this works. Okay, so here's an example of the buy, refurb, refinance strategy. So let's say you purchased a 3-bedroom property for £200,000 and you put down 25% deposit, which is the minimum required for a buy-to-let rental property. So that's £50,000. Then you have an effective 3% stamp duty as it's a second home, and that is £6,000. And let's say legal fees approximately £2,000. So you've currently spent £58,000 on this £200,000 property. Now the average property prices in the area is £220,000 you found through your research. So you're actually £20,000 under that already as you've searched for a motivated seller and you found a great property at that price. Let's say this property does need some work, it needs some renovation. Okay, so then we go on to the R, we go on to the refurbishment, and you decide to do a loft extension to create an extra bedroom. And you also do some painting, you install some new flooring, and you spend approximately £20,000. Now this is approximate numbers. Other high-end properties in the area, which have 4 bedrooms in the same street, sell for let's say £300,000. So this is when you refinance the property. After those works are done, you get the bills quotes, you get the work done. Now stay with me guys so this part doesn't confuse you. So you put down 25% deposit originally for the 200k property, which is 50k. Okay, so now you get the property revalued, which is the key, and the new property is worth 300,000. So 25% of this is 75,000. So now this 75,000 is actually 37.5% of the original purchase price, which was 200,000. Stay with me, guys. And you only need to keep in 25% deposit to keep the mortgage people happy, to keep the banks happy. So what you do then is you effectively refinance the property and you can effectively pull out 25k from that deal. If your numbers do stack up, you can actually pull out the entire amount which you invested originally into the deposit. But in this case, we're going to be really conservative. We're going to say you could pull out half of what you originally invested. So you originally invested 50k for the deposit for the property and you've pulled out 25k. You then decide to sell the profit for 300,000. You then made 125,000 in total, minus the building costs, etc., etc. You made about 100 grand on this investment deal, which isn't too bad. You could also decide to rent the property for a bit longer, wait for the prices to go up even more, then pull even more money out of the deal. And this is what people do. I know some people, friends of mine, they've had the same 50k. They've recycled it 5 times and bought 5 properties with the same 50k. So it is possible to do, but it is very difficult also. There are a lot of nuances. You've got to do the numbers and do the costs, but it's still a very interesting strategy for you guys to potentially research more and maybe even do yourself. So I hope you guys found this video valuable and you've got a lot to think about there. Please do comment your thoughts below on your favorite investing tips for property, or if you have any questions about investing into property. I'd love to hear your thoughts, so please do comment below. If you did find any value in this video at all, feel free to give it a big thumbs up. That helps out tremendously with the YouTube AI. If you're new around here and you still haven't subscribed, feel free to join the investing family by hitting that subscribe button and turning that notification bell on. If you do want to know exactly what stocks I'm buying, what investments I'm buying, my entire investing strategy and my entire portfolio for stocks and for property, then check out that first link in the description below for the VIP membership group. There you can also talk to me directly about your own property and investing situation. For example, a few people in the VIP group have messaged me for personal tips on investing into property, and I'm always happy to help and provide information, because I know many years ago when I was looking for information, there was none around, and I'm so surprised that this information is not taught in schools. But really that comes down to the fact that schools want people to work for money rather than make money work for them and actually live a happy and successful life. But we're getting off topic now. So either way, I hope you guys have an incredible day, and I'll see you guys in my next video. Invest safe.